Good morning. It is Thursday, October 3rd. Today we have Jeff Mackey and his snoring dogs, Robert Marson, Charlie Peabody, and Kevin Bakes Baker. Hey, they're part of the crew too, Mackey. And we're going to kick it off with Mackey talking about Levi's and hopefully a little bit of Nike too. We heard that from Berna yesterday. So what do you have for us on Levi's?
Yeah, you want to put your dogs to sleep, and I tell you put on the Levi's conference call, and that'll do it. For some reason, I don't know how this happened, but the 170-year-old denim company doesn't have a ton of growth prospects yet. Seems like that product's a little played out. Yeah, I'm seeing them. I'm seeing Nike. The reaction to these kind of aging companies going through, kind of some fits and starts here. I'm not sure what people expected to hear from either one of them. Levi's took down numbers last quarter. They're taking them down again now. And I'm not sure what people thought was going to happen. Even when this company went public, I think Ben flipped the IPO, but the rest of the people that got long after they went public are kind of sitting on dead money right now. It's a fine story. There are things that they can do, but it's, you end up with a company that fluctuations in Dockers can send its profits tumbling. It's kind of just fragile. There's not a lot they can do to control their destiny. Everyone in denim is already ripping them off 9 ways from Sunday. I think the play here, or at least the expectation, is that Macy's, the department store, is just a disaster. They seem to be the only place on earth that's selling Dockers. I checked this morning. There are 29 odd different types of Dockers at Macy's, which is just bonkers in a lot of ways. But, it's Dockers are just kind of going downhill. It's down 15%. Business wasn't that bad, though, in the States, and things that they're going to continue to try to grow to the extent this has any juice behind it. It's going to be from DTC. It's going to be from just kind of doing a better job selling Levi's, and it's going to be from margins. But if you're looking for a growth story, of course it's not growing. Again, 170 years old. This is not a market expansion opportunity. In terms of where
they
are,
lost out on the brand, right, Mackie? I have 3 teenagers. I don't think any of them have a pair of Levi's.
No, right? And you're of an age, I'm of an age. We used to make fun of kids who didn't have Levi's. It's like, oh, look at that guy in his French jeans. Oh, yes, what are you doing, Mr. Fancy? Levi's used to just kind of be synonymous with it. Gap ate into them, and this is not an innovative company. Gap, actually, funny story. They exist, that the name, it became to mean generation gap, but it was actually a size gap. Fisher saw that Levi's was only running in two-inch increments on waist and length, and so they decided to make more jeans. Levi's has a long, rich history of not innovating at all, as you can see with the Dockers, as you can see with the denim. They are what they are. I'm not sure why you'd sell it down 8% here, 9%. That seems like a big reaction to stuff that we should have expected. But, that's the kind of market we're in. And again, it's not a great consumer. To the extent we're buying stuff, we're willing to pay top dollars for the things we want. And there's just not a lot of ways for brands that are out right now to move the needle in any proactive way.
Yeah.
So
that said, these guys have more work to do than, like Nike, to me, it's just a hit on that real quick. Make a Caitlin Clark shoe. Like there's plenty of stuff that this company can do that seems really super intuitive. You paid Caitlin $20 million odd to come out with a shoe. She's the only women's basketball player anyone I know can name just right off the top of their head, and have probably watched their games. I have. Release the shoe, dumbasses. There's just more low-hanging fruit there than there is in the denim industry. So, gun to head, I'm still long Nike. I just have no interest in Levi's at all.
Got it. All right.
Hey,
well, thank
Jeff,
you.
Jeff, if they're marketing to the crew that follows the Fonz, that's probably explains why their sales are so poor.
Hey, I know. Fonzie's not walking through that door, and neither is Michael Jordan, for that matter. I'm not sure what either of these companies are thinking.
Thanks. Now we're going to head over. Go ahead.
I was just say it's just not a growth market. I remember that IPO, and I have a buddy who runs a jeans factory on the other side of the world. He's like, it's whatever. It's just like it's the jeans business. There's sometimes we get a little more girls are wearing denim again or something like that. But this was $5.8 billion of sales back then and 6.1 now. It's what it is. It's
going to be cradle to the grave investment banking services. Someone's going to take them private for right around where they sold the IPO 5 years ago, and it's going to be just a collective shrug. This should be a private company.
But they also missed like the high price jeans, right? With stretch and the technology. Like they really missed a long period there of having better technology in their jeans and let other people come out with better options.
I mean, they're being dragged down by khakis, which are ancient and have nothing to do with the pants that anyone's wearing right now. So yeah, they've missed kind of any innovation that you can really think of. But again, it's they're making a textile pant. These are
Sure.
not pants for druids. We have better fabrics now, and Levi should go about making pants made out of that fabric.
Right. All right. Well, now we're going to head over to Robert. Robert, obviously, a lot of the geopolitical news hitting us today and in the past week. I know you're going to be talking about oil. What are you seeing, and what do you think? Are you playing this, or what are you doing?
Well, I have a fair amount of money invested in the energy business, so I need to keep abreast of what's happening in the oil markets. And just keeping CNBC on in the background the last week or so, there were a couple of comments made by the anchors that were just utter nonsense, and I just wanted to set the record straight.
Okay.
There's this notion that the world is awash in oil, and I dug up a chart that shows the 5-year absolute inventories for crude oil, which is about 2/3 of that total oil inventory chart, and refined products. So it's not like there's a tremendous amount of gasoline and diesel around in the world either. Is at the very low end of a 5-year range. Now, I don't know if people understand the nature of the oil business. It's about 103 million barrels a day of demand and supply when it's matched. And Saudi Arabia has 2 million barrels of excess supply, and maybe OPEC has another 1 to 2 at best in the world. So the industry operates at effectively 96, 97% of capacity. In many industries, the semiconductor business is doing well when it operates at 90. A lot of
Sure.
industries don't operate anywhere near 100% of capacity. So there's not a lot of slack in the system if production or the ability to get production via tankers and pipelines to the market were interrupted for a serious time through an act of God or an act of war, an act of terrorism. The market is just really being, run very tightly right now. And then somebody interjected that, well, maybe that was the Chinese electric vehicles and demand in China being disappointed, killing the oil price. Because look, the chart looks like crap. It's gone from 90 to 67 in the last 6 months, 9 months. Well, the oil bulls were comfortable in the 80, 85 range. Some of them were even speculating we're going to get 100 or 110 if this Israeli war got hot, which it did.
Right.
It was a big, what? So what? So I looked into the EV market statistics, and yes, the EV market has no doubt made a dent in Chinese gasoline demand for sure. But China is still supposed to grow this year, not by much. China is the second biggest oil consumer in the world. Of that 100-ish million, the U.S. is 21 million, China is 16, 17 million. And they've been growing about 1 million barrels a day, and they've been the only growth in the world for oil consumption really significantly in the last 10 years. So China not growing their oil consumption is a longer term issue, but it's not causing inventory problems or demand problems that are insurmountable for the commodity. So the global fleet of passenger vehicles, according to Bloomberg, is 1.2 billion vehicles, of which at the end of last year, 40 million were electric vehicles. So just because in China, the ratio or percentage of EVs has jumped up to 40, 50% maybe this year, doesn't mean that EVs are taking over the world and gasoline consumption is going to plummet. In fact, China grows their combustion engine vehicles more than any other country in the world too. And those cars that people are buying this year and bought last year are going to be on the road for 10, 15 years, most likely consuming gasoline. So the oil business does face growth issues, but it's not overcapacitized. There's no inventory issue, and the demand in the big picture from EVs as far as oil consumption for the foreseeable future is low to mid single digit percent, and it's not a big deal.
So, what are you telling people to do now? So, you have oil prices going up this morning. Is it just hold your positions, or what's the so what on this?
Well, let me tell you how to trade oil stocks. You never buy them when oil's up a lot because the stocks
That's
are
right.
cheap. Okay, that's the wrong thing to do. And the question is, do you buy them when oil is down a lot and the stocks are cheap and the numbers are crappy? And that is what I've done, but I have 35% of my portfolio in energy. So Robert's not buying anymore. If you didn't
Right.
have any energy stocks at all, or you were way underweighted, it's only like 3 or 4% of the S&P, while having double that in percentage of profits. I think today is as good a time as any to add to energy stocks in the in the broad market. Whether you want to own pipelines or chicken's way to play, or you want to own the most levered oil producers. My now, if oil could go to 50, Saudi Arabia said that. The charts might say that. I can't predict. Nobody. Okay, if anybody tells you they know where oil's going, just turn them off, because no one can figure it out. Not the chairman of Exxon, not me, not my snoring dog, my snoring Yorkie. So so you just have to buy oil stocks when oil's at the lower end of the range, and if oil goes down another $10, $15, then you buy a little more, because after 50 or 60, the next $30 move is most definitely going to be up.
Got it. All right.
Well, Robert, I go through 4,000 charts every ETF out there, and I try to find the 10 best. And I got a soft spot in my heart for energy from the 90s when everybody was chasing AOL. I was chasing Noble Drilling and Chesapeake and what have you. And ExxonMobil, if you squint, looks okay, which I think plays into let's go hide and have of our just in case things get hotter in the Middle East. But from the integrateds to the E&Ps to even the gassier names to the refiners to the service companies and the drillers, I just don't see anything going on there at this point in time, for what that's worth.
Well, for what it's worth, you're going to say that every single stock I recommend on this show for the rest of our period.
Say that. But
I do okay in the stock market.
Okay.
But I'll tell you what, I own long dated oil. I like long dated oil as a bond replacement. If you buy June 27 oil, it's about $65, $66. So you're going to get a 10% carry versus spot. And so, hey, if you think the economy is going to be okay. One other thing I note, U.S. production has flatlined. This is a big deal. I don't think enough people are talking about this, and this will be my one contribution to the show. U.S. production is flatlined, and EURs in the Permian are down 50% versus 2018. And I don't think Americans have any idea the pain that comes if production stalls out and we go back to 10 million barrels a day, 9 million barrels a day in America. Let me tell you something. The dollar will be weaker, bonds will be higher, and the stock market will be a lot lower. And Robert's energy stocks will be a lot higher. That's my view.
And Ben's going all longshoreman on us there. Jeez, that
That's
was
right.
naturally
Well,
stated.
he just said that's the only thing he's going to talk about today, and I'm going to take the other side of that trade. That's the trade I'm most confident in today. Well, thank you. So
part of my parameter, Mr. Baker, is I only buy things after they've had bear markets.
God bless you.
Part of my formal buy process.
Yeah, Kevin, I've been recommending Chinese stocks for a year on here, and it's the same kind of thing. Like, oh, those look terrible. It's whatever. So Robert and I are the local pain gluttons, value investor guys.
There's a lot of ways to make money. God bless you. We're going to be talking about China later, but
momentum investors have been, killing it for the last couple of years.
Sure.
So, yes.
Well, now I want to head over to Charlie. Charlie, I wrote in Arrows this morning about companies that are taking on leverage to pay back their PE shops so that the PE shops can give money to their LPs. So talk about leverage and bad acting, but what are you looking at on the things that need to be financed today?
Well, so ahead of the jobs number tomorrow, and I'll be quick to add that I have no valuable insight as to what those numbers are going to look like. I wanted to reiterate a theme that I've been espousing here that hasn't worked yet, but I think it will, and that is to sell those things that need to be financed. And by that, I'm talking about home builders like Lennar or DH Horton, or car companies like AutoNation, CarMax, Carvana, or recreational vehicles like Polaris, Brunswick Corp, Harley Davidson. Those. So those are
Sure.
the things I want to sell, and I think it's going to work out to be out of those over the next 6 to 12 months. And the reason I do is simply either you're going to have to cut prices because affordability is impossible right now for a lot of those products, or you're going to miss your unit sales volumes. And so
Right.
that's the general gist of the trade. So ahead of tomorrow, what I wanted to make note of is what is happening with the rate structure, particularly the long end of the curve. If you look at the 10-year, I think this morning it's the yielding around 3.82. Ben, you keep me honest, but um, the highs, the rally we've had in rates since April, which is really where we've had the biggest moves, um, we've seen lower highs in yields each month, and that the high in the month of the high in yield in the month is always come in the first half of the month. And so now we're back up to 382. The high in April, I think, was around on the 10-year. It was around 384,
Hmm.
and this will be the first time that we may actually have a higher high on a monthly basis over the last 6 months. So I think that's an important technical note. And in fact, the 30-year I think made a new high at 414 since April. I think the old high was like 412. So if the 10-year, if tomorrow we get a strong jobs number, and as I said, I don't know what we're going to get tomorrow. We get a strong jobs number. I think that 10-year breaks through the 384 level that has been sort of
Okay.
the high since April. And if that's the case, we're going to see higher rates continue here, which is going to make financing, durable goods very, very difficult. So I'm sticking with that theme. Sell those things that need to be financed.
And does it also come into play? Obviously, you're talking about rates on an absolute level here, but there's also the consumer and what they've been demanding over the last few years through COVID, after COVID, when they had money in their pockets. Like, how much of this stuff can really be bought? So, do you look also not just into it from the affordability standpoint, but how do you pick which stock to choose? Is it things that, like how many RVs do you need, or how many, jacuzzis does one have to buy, or how do you decide where to play this, or is it just more of a basket?
For me, it's more of a basket. But I mean, if you look at, sales of cars, we're running 15.7 million car sales, and that's considered low. I mean, normal, you'd think of 17 million. So that's why the marketplace is expecting a pickup if rates come down. If you look at home sales, again, we're running at very low historical levels. But then you look at, the mortgage purchase application index,
Right.
and it's at lows since we've seen since 2015. So even with this, decline in rates that we've had since last fall, the fall of 23, we've not seen a huge pickup in demand for some of
Right.
these products.
Right. Well, thank you. I want to head over. We now have Kevin Bakes Baker. He's got a number of tickers with technicals for us. I know that you've probably been scouring through all the charts this morning to pick your favorites. What are you going to walk through today with us?
I'm going to walk through Nukes, NUKZ, and I know that Berna and Ben and Charlie covered this. If we could call up the Nukes chart, interestingly, I bought it on the 23rd, and their show showed up on the 24th, where they talked
Yeah.
about their 5 best ways to play uranium. So great minds are thinking alike and arising at things in different ways. I've always found that I've made the most money when the technicals and the fundamentals collide. And in nuclear, it's about the prettiest picture I've ever seen. Here's the buy. That red arrow going up is the buy on the 23rd. The relative strength new high, I think, is very impressive. The volume's picking up. This is obviously on the Constellation Energy and Microsoft news. Interesting. interestingly, Microsoft looks kind of lousy right now, and I don't know why that is. Now, so that's just something to think of that I'll bring up in a larger point. I've been involved with this for 4.5 years. I've owned URNJ and URNM. I've made money both times. I didn't know Kazette and Prom from a 2x4 when I first started this journey, but I'm a pretty quick study. And the uranium story is about the most bullish thing I've seen in a long time. And I like to keep things simple. Fukushima, that's a slip. Fukushima um, uh, in 11.
I was curious where you're going with that. I was like, this is a new story I haven't heard about.
Don't at me, folks. Fukushima in 11 did all the things that you would expect it to. I almost, thought Jackson Brown would come out of retirement and have a concert bashing nuclear. We took the uranium price from 130 to 18. Nobody would finance one of these plants. The Saturday Night Live skits were going to come back, and now 3 Mile Island is back in play. So we've gone from a COVID low of 18, the spot price hits 106, comes back to 80 where we are right now. And I always like to do this when I find an ETF. I like to find the top 3 because then it finds individual ideas. My next chart is CCJ Cameco, which.
Okay.
You guys talked about. I agree with you. I think, frankly, this is not a great looking chart, but I know the fundamental story behind it. I like the fact that it's above the 200 day. I like the volume picking up. And I like the story. I'm a little surprised they acted as badly as they did with the spot price only going from 106 down to high 70s. We're at 80 right now. Now, the next one is Constellation Energy. That's the number 2 name here. Yep. And this gap up is very impressive. The up volume is great. The fundamental story was very promising. And with the 20-year Microsoft news, it gets even better. And I think, if I had to put an inning on this, I think we're in inning 3, maybe 4 of the resurgence of uranium going to new all-time highs eventually. And then the third name is SMR, NuScale small modular reactors, kind of cute. So this theme is broadening out. I'm looking at URNJ, the junior miners, intensely, because I think the operating leverage you have with miners, where the top line screams, expenses don't go up that much, the earnings explode, and people look around and the PM drives picks an analyst. There's not going to be a uranium analyst around, so someone's going to be indoctrinated and say, we don't own anything in nuclear, we don't own anything in uranium. Could you please fix this? It's not in the S&P, so the PMs that really want to outperform will be showing up. So I couldn't. I'm going to come back at some point. I'm going to say United, the junior miners, URNJ, is 10% of my portfolio. Nukes is 10% of mine, and we're going to talk about this a lot, I think, given the conversation that Charlie, Ben, and Berna had, and I couldn't agree more.
Well, thank you for that. And just to follow up on the Microsoft technicals, one of the things, sometimes we go through the longbow trade signals, and I think what happened is you had these bullish momentums going, but it's turned both neutral on the short term and the intermediate term. So I think that you're picking up on that. And when you have that happen, even if it's getting here, I'm showing like really close to a buy signal, the problem is that the momentum's really stalled. And when you have that, a buy signal might not be that great. But I'm also looking like implied volatility in the 1 day, 52.7%. So obviously people have been concerned. There has been more fundamental news about, their AI offerings. It doesn't really do anything. Are people going to pay anything? Are they going to see any profits on that? So I think that there's some fundamentals aspects to that. But the technicals obviously have stalled here, if it's a kind word for that. But if you are a buyer, I've got 9-to-1 odds that you can make, maybe 5% up to the high. It's only maybe down 55 bips to the low. But like I said before, these technical signals don't look as well when you have a breakdown in momentum, and you're seeing that both on the short term and intermediate term with that stock.
Mm-hmm.
So,
well, Kevin,
go ahead.
Can I ask a quick question? Your comment about the spot market not moving as much as the underlying stocks, I think, is an interesting one. And I'm really asking a question here about Yellow Cake, which trades on the London Stock Exchange under the symbol YC. that has actually, I own that plus all the other names you mentioned, so I'm a big believer in uranium. But that started to move recently, and I don't know if you're seeing anything in the actual physical uranium versus the stocks. It's changing now.
It was up $2 last week, give or take. I'm watching it intensely now. As you know, these are long-term contracts, so spot is a very, very inaccurate portrayal of what's really going on. But things have there's a seasonality aspect. People are coming back. They had that big conference in London, and we're starting to hear about some longer term contracts being signed, and hopefully it shows up in the spot price. So believe me, I'm watching it, and let's keep talking and find ways to make money for everybody. Oh,
Charlie,
one quick
as a
thing.
disclaimer, we have yellow cake too, but one of the things I think that made it pop was basically Putin asking the government to, limit exports of nuclear fuel, and so you saw the global X uranium ETF jumping 4%. So you
Okay.
saw some of these things. Commit goes up 5.8. So that you had some of these stocks rally on that, in addition to just generally the Microsoft news and other news.
Hey,
One quick
Robert,
thing before I forget.
we just got $2 pop in oil. Biden's talking about just attacking the Iranian oil facilities. Looks like it hit 74 this morning.
Sounds
Yeah, I
good
think
to
Carg
me.
Island is a site that has been identified as a potential target.
Yeah, they're playing with fire if they do that. I'll tell you what, that's not a good thing for global risk markets.
Now, by the way, the oil stocks have held up better than the commodity, so it might not be a phenomenal time to buy oil stocks. I'm just saying when the oil stocks get cheap following commodity down. In fact, as you know, our MLPs, our natural gas and oil MLPs are at all-time highs, right now. So or 5 to 10 year highs. So
Before we
and they're
go,
related to energy, so.
I want to give a shout out. I did this offline, but I want to do it on the show. You haven't lived until you see Jeff Mackey on Trends with Friends. I've always liked Trends with Friends, and when you put Jeff Mackey in there, it is absolutely lights out. So I recommend it highly.
A whole different show, different time slot, as luck would have it. So you can watch them back to back if you'd like. Thank you, man. I appreciate it.
Delighted. It's heartfelt.
All right, that's it for us today, Thursday, October 3rd, and we'll see you tomorrow on Friday.
Wow, the ISM came in pretty strong also. Look at that.
Yeah.